Hi, welcome to our channel Creative Investing. In this video, we are going to go through everything that you need to know about an FHA loan 2023 to see if you can qualify for it and if it's the right loan for you. FHA loan requirements are generally more flexible than what you'll find with other types of mortgages. If you have a lower credit score, minimal savings, or a higher debt load, this option can offer you a better chance of qualifying for a home loan. An FHA loan is insured by the Federal Housing Administration, FHA, which is overseen by the U.S. Department of Housing and Urban Development. This government-backed mortgage product is designed for low to moderate income borrowers and comes with lower minimum credit score and down payment requirements. Compared to conventional loans, FHA loans also have more relaxed underwriting standards, including a higher allowable debt-to-income ratio and increased flexibility if you've had financial difficulties like bankruptcy in the past. You are thinking about how FHA loan works? First-time and repeat home buyers alike can use the FHA loan program to buy or refinance a home affordably. The FHA program backs mortgages for single-family homes being used as primary residences. But you could buy a multi-unit property, like a duplex or triplex, as long as you live in one of the units. Since the federal government insures FHA loans, buyers with smaller down payments and lower credit scores can qualify for mortgages. This can make home buying much more approachable for those with lower incomes, who might have trouble saving for a down payment and closing costs. To qualify, you will need to meet FHA loan requirements. But, fortunately, these are much more lenient than many other loan programs. Types of FHA loans. There are different types of FHA loans, including purchase loans, for buying a home. Streamline refinances, for refinancing an FHA loan to a new one without needing to undergo a credit check or other steps in the underwriting process. 203(k) loans, for buying and fixing up a home. Cash-out refinances, for tapping your home equity. FHA loan requirements. Credit score, minimum credit score of 580 or 500 with a higher down payment. Down payment, 3.5% or 10% with a credit score between 500 and 579. DTI ratio, capped at 43%, although some lenders allow a higher limit if a borrower has compensating factors. Loan limits, $472,030 or up to $1,089,300 in higher cost areas. Mortgage insurance, required for the entire loan term if your down payment is less than 10%. Each mortgage lender has the flexibility to decide what loans they wish to offer and the lowest credit scores they're willing to accept. Even though the FHA has requirements, FHA-approved lenders can also impose their own standards, a practice known as overlaying, depending on the level of risk they're willing to tolerate. That's why you might see different FHA credit score requirements with different lenders. If your score is below 600, be prepared to find a lender who can put your application through manual underwriting, since getting approved can get more challenging the lower your credit score. When you check your credit report, make sure it's correct. If there's anything listed there you don't recognize, work with the credit bureau to remove incorrect items. You might also need to work to pay off any debt that's fallen into collections, which can seriously hurt your score, or contact previous lenders to clear out any old or resolved debt that's been paid off. Other steps you can take include making on-time payments, paying down existing debts as much as possible, and refraining from taking out other loans or applying for new forms of credit as you're shopping around. You'll need a down payment of at least 3.5%. This minimum increases to 10% if your credit score is between 500 and 579. If you're low on cash and this amount seems like a stretch, you might not be completely out of luck. FHA loans allow borrowers to draw down payment funds from sources other than their own savings, such as a gift from a relative or close friend. FHA loans are also appealing to buyers who don't have a lot of cash because of the FHA's flexible standards on who pays for closing costs. You could be eligible for seller credits at closing, which can possibly cover 100% of your closing costs. While you're exploring the qualification process for FHA loans, you'll hear about DTI, or debt-to-income ratio. The maximum DTI ratio is typically 43%, though your lender could make exceptions up to 45%, 50%, or even 57% with an FHA loan. This means that on a monthly basis, your combined debt payment, including for the mortgage, shouldn't exceed 43%. FHA loans have loan limits that dictate how much you can borrow depending on the type of property you're financing and where you're buying. In 2023, the FHA loan limit for a single-family home in most counties is $472,030, but can be as high as $1,089,300 in higher-cost areas. FHA mortgage insurance. If your down payment is less than 20%, you'll be required to pay FHA mortgage insurance premiums, MIP. MIP are fees you pay to protect the lender in case you default on your loan. In most cases, FHA borrowers pay an upfront premium equal to 1.75% of the loan amount at closing and between 0.45% and 1.05% annually over the life of the loan. FHA loans are not for first-time buyers only. First-time and repeat buyers can finance houses with FHA mortgages. The FHA loan is often marketed as a product for first-time buyers because of its low down payment requirements. But not all repeat home buyers have excellent credit or lots of money saved for a down payment on a home. The FHA home loan program is open to them, too. You couldn't use this type of mortgage for a second home, investment property, or commercial real estate, only home purchase loans for primary residences. The FHA will insure mortgages for any primary residence. There is no requirement that you must be a first-time buyer to use the FHA loan program. What will disqualify you from an FHA loan? A home purchase price above the FHA's loan limits for your area will disqualify your application. Buying an investment property or a vacation home will also exclude your loan. As for personal underwriting, a debt-to-income ratio, DTI, above 50% or a credit score below 500 would make getting approved almost impossible unless you added a co-borrower who has better borrowing credentials. How hard is it to get an FHA loan? FHA loans make credit qualifying easier since they can lower barriers to getting a mortgage approval. But finalizing any type of home loan requires persistence and patience. Loan officers have to check your income. Appraisers have to verify the value of the home. Attorneys have to search the title history of the property. After you've agreed on a purchase price and entered a contract to buy the home, it may take up to 2 months to close on the loan. Can I get an FHA loan without 2 years of employment? The FHA wants to see 2 years of employment history from loan applicants. But if you have gaps in your employment history, you can show a 6-month work history plus a 2-year work history prior to the gap. And if you've changed jobs, that's okay. Your lender may ask you to write a letter explaining the reason for the job changes. Compared to conventional loans, FHA loans can offer competitive interest rate mortgages to homebuyers who have lower down payments and lower credit scores. In exchange for getting more relaxed credit qualifying, FHA borrowers pay upfront and annual mortgage insurance premiums. Often, the cost of this extra insurance can pay for itself through the interest savings an FHA loan can offer. Other times, homeowners may save more with a conventional loan. FHA loans don't have income or geographic limits. Other low down payment mortgage programs may have special eligibility requirements. Many are limited to those with low, very low, or moderate income. Or they are available to only certain groups. The VA loan, for example, allows 100% financing. But you must be an eligible military borrower to use it. The USDA Rural Development Loan also allows 100% financing, but the program requires you to buy in a designated rural area and imposes income limits. By comparison, anyone can apply for an FHA loan. They aren't just for certain groups, income levels, or zip codes. For most buyers, FHA mortgages require a 3.5% down payment. This makes the FHA mortgage one of the most lenient mortgage types available nationwide. Your down payment money could be a gift from a family member, employer, charitable organization, or government homebuyer program. FHA loans feature some of the most flexible and forgiving credit standards of any available loan type. With an FHA-backed loan, you don't need perfect credit. We hope you found our video informative. If you did, then please give us a big thumbs up. Subscribe to our channel and press the bell icon so you never miss an update. See you in the next one.